Good day. Ira Epstein of Linn and Associates with your SPDR ETF video for this Wednesday. This is the 29th of April, 2020, and we're right now at 5:30 p.m. Central Time. Interesting day. We were coming in today to GDP numbers, coming in today to other confidence numbers throughout the world, looking to see tomorrow, by the way, the European Central Bank, what they're going to do, our FOMC meeting today. So as the day started off early in the morning, I'm waiting for the GDP number to come out at 7:30, and 7:30 comes and there's no number. Apparently the news wires I'm on, something got hung up. At that literally exact moment, Gilead comes out, the Gilead Science Inc., and they make a positive statement about a test they've been running on a drug that is a treatment for COVID-19. Not a cure, not a vaccine, a treatment. The market takes off on that, and I'm watching this market. It had been up overnight anyways, and it kept running to the upside. GDP numbers come out terrible, 1.3% worse than the market was looking for. I think they were looking for 3.5. They got 4.8. It didn't matter. So then I said, all right, I understand what's going on. The market's decided to throw caution to the side. Any idea that you can get a treatment helps the marketplace, because that's the beginning of the end for COVID-19, at least in a control sense. The next part that happened was the Fed meeting, and as you know, the Fed got the markets back, and so the market stayed strong. And if you look behind me, you can see TLT's down and XLP. Those are your two down, everything else higher on the day. When we come to the markets, now let's go to XLK, and I saw Microsoft earnings, I saw Facebook, everything looks good. So the market today, during the day, this is what we looked like yesterday. And if you take out the high of an outside day down there, it's the outside day, that number one sets off in the market to the closest moving average above it, or a Bollinger Band. That's my theory. It's something I've watched over many years, and I believe that that's the case. In addition, you've cleared a hurdle of 62% in the market. Now, if you get much higher, the odds of getting back to these lows, throw them out the window, and you'd need another resurgence of COVID-19 or something like that to do that. Here's what the chart looks like with the swing line. So this is what it looks like coming in, and you just add it to the swing to the upside. So the first thing I do is put moving averages on the chart, and I can see none of the major moving averages are above the market. The 200 days where we've been fighting for the past 2 days, and the market jumped over that. Then you've got, well, actually that's the 100, then the 200, and then the 18. So next I look for the Bollinger Band. The Bollinger Band is at 92.86. That is the number I now think the market has gotten its gun sight, and it wants to hit, and that's where I think the pros will take some money off the table. Why? Simply because you have run up for 7 weeks dramatically, and at some point the markets take a breather. No other reason than that. I don't have a fundamental reason, not interested in one, but the first challenge of a Bollinger Band is exceptionally powerful, and a lot of what I've come to believe the pros, whether they're algos, whether they're individuals, they look at that and they realize when you haven't hit it in a while, it's important. And when you hit it, that's where money comes off the table, and that's what I think. I think the same thing happened today to the Van Eck SMH. This is the 25 index semiconductor fund. You hit it. I don't care if the market goes higher. That was where I think the pros took money off the table. None of this is bearish. I'm not talking that. I think on pullbacks, we'll have to take another look at the market. But there is a point where traders do come out of markets. When I look at the industrial sector, overbought, first challenge of the upper Bollinger Band that hit it. I feel the same thing there. There's a theme going on here. Energy sector, same thing there. First day over the band. When I get to QQQ, hasn't hit it. So those others that hit the market and those spiders, I think that those are areas the market is vulnerable for pullbacks. For no other reason that there is a point that you take money off the table, and that might be it. Does that mean all traders are getting out? That's not what I'm saying. I'm telling you it's an inflection point. That's what I think. On the QQQ, that number's 224.60. I can see the run-up. I mean, this is a run-up that has gone almost, or it reminds me of 2008-9 when the market just bottomed. It never looked back. Go back on your charts and look at that. You haven't looked back, all right? So everybody that is saying, well, a retest of these lows is in the cards, bankruptcies are going to happen, so on, I understand what they're saying, but that's not the psychology at work right now. The psychology is euphoria with Gilead finding possibly a treatment, the euphoria the Fed's got the markets back, the euphoria that states are opening, the euphoria that people are going to go out. That is what they're dealing with. The reality of all that is down the road, and you don't want to be ahead of the market, you want to be with the market. When I look at the emerging market, same thing here. I believe that this is an important day. You've hit a lot of numbers where I think the market's vulnerable. Now, gold on the GLD, not the futures, put out a buy signal. You have the pattern of higher lows, higher highs. That signal gets annihilated if you get back under 159.16. So 159.15 would change it to lower highs, lower lows. I mention this because you have divergence. You've got momentum pointing down, prices went up, something's going to give here. They got to get in line with each other. What I do like in the market is while it's pointing down to try to work out of an overbought condition, it hasn't succeeded, hasn't done anything. I'd be cautious. Caution is very important right there in that market. In the gold miners, you have not lost the embedded reading, which rules the day. Now, the market did come down today and take out a previous break low. It got to 32.82, taking out 32.93, and then reversed. The number now you don't want to take out that could start this market turning back down, 32.82. The market wants to go higher, c'est la vie. At least you got a tight stop. Why? Why do I say that? Because I'm going to come back to that. Because the odds favor that if you take out the low of an outside day up, it's the flip-flop of what we just started this with, that price and the 18-day average, the closest moving average, will make a run at each other, or the Bollinger Band. In this case, that's the number. Does it always work? Nothing always works. You're playing probabilities on charts, no more than that. When you look at TLT, we've talked about the fact that this market's had a very hard time here going up and trying to take out anything up there. Still not succeeding. The other part of the market, lower highs, lower lows. The other part of the market coming down here in this momentum. You're caught in this, what I like to call it, if you think of this as a bottle of wine or whiskey that melted, and price is caught in it trying to break out of the neck of that bottle one way or the other, hasn't done it. In FXE, which is the euro, the market's run up to a key number here. Will it get over 102.95 and negate the downtrend? The bears defended their position today. The futures market's stronger than this market right now. If you take out 102.95, in my opinion, you don't want to be short anymore. You've got divergence because momentum's trying to turn up, market is stalled, and that would break the pattern of lower highs, lower lows. So you put it all together, you try to come up with ideas, and that's what I do. You know, I've been putting out these updates, and I started my SPDR ETF, and I've been debating about, do I put it out in the morning, do I put it out in the afternoon? So I've been doing both. Nobody could say I didn't fulfill exactly what I said. A lot of people like the idea that after the market, they get to look at this, and I do realize eventually we all go back to work, and you're really going to look at these videos at 9:30 in the morning because I would record them about 10 minutes to 9. I want 20 minutes of the market going so you get some price action in there and then put them out. I'm making a decision. But I cover an awful lot. Let me tell you what I cover. I cover 27 different charts. The idea is to give you confidence in ideas you might have. And in those charts, these are the markets I'm going to cover for you. All the main spiders, the main stock indices, the metals, gold, silver, and the gold miners. I might even add the silver miners, TLT, the currencies, the euro, the yen, the British pound, the energies, and I've added UNG. So I've even added that one. The one I'll probably dump here is USO. USO is a lost fund. It just doesn't know what it's doing. Now it's had reverse stock splits so that it can stay listed because the value is so bad. And if you look at the chart, how do you figure that out? It's too difficult. So when I look at that one, I just go, okay, but there's other markets that make sense. Oil's pretty good, OIL. So you've got plenty of trade there. So where are we in that? Well, if you decide that you like this, then all you need to do is go to our website. Under the word research, at the very top, you'll see it drop down. That's where you subscribe to it. The cost, $8.95. It's about a 15 to 20 minute video each afternoon minimum. I've been putting out 2 a day, but I don't intend on doing that forever. But I've been doing that. And I cover the market in great detail, specific. Buy, sell, do this, don't do that. I'm giving you what I think in the market with my 50 some odd years experience. So if that makes sense to you, www.iraepstein.com, research, it'll take care of itself. I'm Ira Epstein. You have a good day. I'll talk to you all tomorrow.